China, in many ways, is the big story for the global economy right now. Let's start with GDP. You revised the forecast from 8.4 to 8.0. Then this week we got a big deceleration in third quarter GDP growth. Many analysts have revised lower now their forecast for the fourth quarter by a good amount. Do you see the possibility that the 2021 GDP number for China will now come even weaker than you thought?
Yeah, we think there certainly is an accumulation of additional risk. But, if you step back a little bit, you see for the year that the factors that have been driving growth lower are still present now. Heavy fiscal consolidation, lagging consumption, as you said, private investment, especially in the real estate sector. The risks are accumulating, though. Global supply issues, that's not just a problem for China, of course. Think about microchips. But the property developer sector, the tensions there are a new issue. The power sector has seen shortages. So we're accumulating downside risks. So far, we're comfortable, though, with this year's forecast.
Well, speaking of risks, the IMF saying that the projections for China's growth reflect the effect of financial tightening on real estate investment there. And, of course, Evergrande's debt meltdown is the big driver. So how big of a risk does this pose to the economy?
I think for the moment, the risk is contained. We've seen sort of some of the firms being in trouble, but the spread of the risk within the sector and more broadly to banks or the macroeconomy hasn't quite happened yet. I think that has to do with the fact that people understand that the government has the tools to contain the risk going forward. But that doesn't mean it's not worthwhile monitoring, right? There is a risk of escalation always, and we much hope that the authorities have their eyes on that. I mean, if you step back a little bit, there is a reason for deleveraging in that sector. It's a high leverage sector. And so a gradual deleveraging path is welcome, but you have to be careful not to go too fast or not to go too slow.
Well, certainly when you have a sort of an explosion like Evergrande all of a sudden, and you're echoing, PBOC Chief Yi Gang, who on Sunday said, yes, the government can contain the risk, prevent a systemic risk from spreading. So what does the government need to do to contain it? And for example, a government advisor yesterday saying they should go ahead and cut the triple R rate again.
Well, I think macroeconomic measures that sort of flatten the market with liquidity, or if you think about fiscal policy or monetary policy in general, are sort of the last step. You want to start with making sure that within the sector, the good firms and the bad firms get separated. And I think that's really where the focus should be at the moment, given that it's still a contained crisis. That you can do by making sure that the banks understand that there are good and bad firms, and then longer term, you can think about strengthening your corporate bankruptcy and restructuring framework. That's an area that we have pointed to for a long time, and I think the authorities understand that there's a room for reform, which ultimately will help in a situation like this.
I just have to pin you down, though, on cutting the reserve requirement ratio again. Do you think that's a possibility? Do you think at what point, is there a point where it might be a needed step?
I think the PBC has its eye on the macroeconomic picture, and so we would look at inflation, we would look at growth at a time where the growth momentum is slowing and where the CPI inflation still is really low. I don't think that's the time for macroeconomic policy measures. That doesn't mean that more sectoral policies aren't helpful, so one would have to look in detail at what they have in mind.
So another big risk for China, actually for the world, of course, is supply chain disruptions. And they're being made worse, it seems, by the power crunch in China, right? Because factory shutdowns reduce supply, then the costs rise for transporting goods around the country to ports, to docks, to ships. When will this global supply chain crunch end? Do you think we'll see it by the end of this year? Do you think it will last longer?
That's a big question. China isn't an exception here. All the countries are in it. We would still think this is ultimately a transitional issue. I think the power sector problems in China I would think have a different nature. This is domestic supply of coal, but also renewables. There's the question of enough imports, of course, when it comes to coal. But there's also the question of these long-standing policies to limit energy consumption growth and energy intensity. All of this came together in sort of a perfect storm, and the authorities are, carefully looking at this, and I'm sure they'll find a way to ease some of these pressure points.
There are some signs just very recently that Chinese policymakers are easing curbs on property, on power that help contribute to some of these disruptive forces in the economy. Do you think they'll maybe continue to ease up on some of the more restrictive policies to make sure they can sustain the economy's momentum?
I think these are different questions. So for the power sector, you have to have technical solutions for what ultimately are technical problems. Property sector, we discussed, you need to contain this. You don't want this to spread beyond where the problem is. The larger question is, where is growth going? And I would think that this year has seen very heavy fiscal consolidation, has seen monetary policy tightening. So if the growth momentum next year is indeed slowing, as some of these new risks suggest, then I think there's consideration should be given to ease macroeconomic policy, which would be the right tool for the right problem.
Inflation, a tale of two inflation gauges in China, because the PPI in the latest month up just about 11% year over year, the CPI under 1%. Is the PPI problem a supply chain problem? And are you at all concerned that if it continues, it's going to start spilling over into the CPI?
Yeah, very interesting problem economically. I think that traditionally you have seen wide and large swings of PPI inflation around CPI, which is much more moderate and its movements are much lower. Currently, the drivers of PPI are predominantly global commodity prices. Now, of course, China is part of the global commodity market as a big demanding country, but mostly this is an external phenomenon. You have to ask what are the factors which are sort of dividing PPI from CPI developments. And I think one underestimated factor is the fact that consumption still is lagging overall headline GDP in the recovery. So if firms considering passing on some of these higher costs at the upstream to the downstream markets, they look at where consumers are, and consumers are still careful. So, as long as we do have that sort of slowing growth momentum, consumption still lagging, we're comfortable with assuming that CPI will not become a large problem in China.
If there is still this question of growth and sustaining momentum as we go into 2022, do you think that there will be some looking back to this very dramatic move towards reining in big tech firms, education, fintech, so many things, and maybe easing up on those kinds of more restrictive policies just to give the economy a little more breathing space?
There was certainly a huge wave of regulatory measures along a number of dimensions starting last autumn. And markets looked at this and said, this looks discretionary. We don't quite understand where this is going, and so investor uncertainty was on the rise. I think there's a lesson here that while you may have good intentions, you want to address competition issues in the tech sector, which are real, financial stability issues in the fintech sector, which are also real. You got to go about this in a comprehensive, well-communicated fashion, and I think some of these lessons, will also apply for next year. But if there is a macroeconomic slowdown in growth beyond what we expect, then you want to use macro policy, not this kind of regulatory measures. Just
one quick final question for you. I think everybody's wondering what someone like you sees about the property slowdown in China. Does it spread across Asia potentially? Does it affect the global economy at some point?
I think at the moment, that's not what we would be seeing. Of course, if you had a major risk scenario in China, that would impact other countries. But that's not what we are seeing at this moment, where the risks in the property sector exist and they're real, but they are contained to the sector. So that's not the moment to speculate about a risk scenario like that.